Hello and welcome to a very special interview on Bloomberg UTV with a man of the moment, Reserve Bank of India Governor Dr. D. Subbarao.
Thank you very much. Thank you, Tamal. Thank you, Mr. Law. It's a pleasure being on Bloomberg UTV.
Governor, let me ask you the very obvious question first. How bad is the macroeconomic situation? The current account deficit is the worst in the history of independent India. Inflation situation is probably the worst if you keep Vietnam out among emerging markets. Rupee is sleeping. Foreign exchange reserve as a percentage of GDP is much lower than what it was 5 years back. Something very similar which we saw in 1991, but at that time economy was closed. Now it's a different story. Are we heading towards a crisis?
No, I believe we're not heading towards a crisis. You're right that the macroeconomic situation is disturbing, but it's not alarming. In 1991, an implosion was imminent. In 2012, an implosion is not imminent. And precisely for the reason that you had mentioned, which is that we are globally more integrated now, and therefore insulated or somewhat better prepared to absorb shocks. You're right that there is twin deficits once again. There is somewhat of decline in reserves. Short-term debt as a proportion of total debt and short-term debt as a proportion of foreign exchange reserves, those ratios have gone up. Several external sector indicators have deteriorated. But regardless, you must note the difference between 1991 and 2012. Which is that our financial markets are deeper, more mature, more diversified. Our regulatory systems and our crisis response mechanisms are more sophisticated and more robust. And even if you take the indicators, foreign exchange reserves that you had referred to, in 1991 we had practically bottomed out. Today we have reserves close to $300 billion. And by most measures,
but you have a 2 trillion economy now.
We have 2 trillion economy, but even as I have admitted that indicators have deteriorated, they're still quite, I would say, within safe limits. Just to give you one indicator, the Greenspan-Geraghty rule for reserves. Okay, I think that ratio is reserves to short-term debt. That norm is 100, we are close to 400. So I think we're nowhere close to a crisis, but I would admit that there are significant concerns about the global economy.
So just to take on that, one of the biggest concerns that you've had to grapple with, the corporate India has had to grapple with, has been the currency. And just to take on from the point, and I know that it's occupied a lot of your time and your effort as the governor. You've also talked about in your statement, in the policy statement, that with global capital flows to emerging markets projected at lower levels in 2012, this entire current account deficit continues to pose a challenge to you. What's the medicine there, sir, according to you?
For redressing concerns on the current account deficit?
And more specifically on the currency, on the inflows.
Well, they're interconnected issues, but let me also try and address them. First, on the current account deficit, yes, it's been high and it's projected to be high this year. Current account deficit has been high because exports have moderated. Imports have gone up on the back of oil prices and gold. So our action yesterday, I believe, would to some extent restore inflation expectations and therefore reduce the appetite for gold. As far as oil is concerned, we have strongly exhorted adjustment of oil prices, which should, if not immediately, but at any rate in the short to medium term, have an impact on the demand for oil. So I believe that while there cannot be a short-term overnight fix to current account deficit, we need to be taking measures from now on so as to make it, bring it back within acceptable levels. On the second part of your question about currency, of course, it's moved rather markedly since mid-August, of August 4 to be more precise, when the US debt downgrade took place. But we have intervened in the market in conformity, I believe in complete conformity with our policy, which is to smoothen out volatility and to prevent disruptions to macroeconomic stability. Otherwise, our policy continues to be that the exchange rate must be market determined. There are, of course, people who benefit, who gain, and people who lose, both from depreciation and appreciation of the currency. But just one final answer to your question on the exchange rate itself. If you take the 36 currency real effective exchange rate, that used to be overvalued, that's near its base level now, which shows that the currency has found its level.
Doesn't give you sleepless nights anymore?
Well, both the Reserve Bank as an institution and I, we keep concerned about the inflation exchange rate. And that's also because, the exchange rate moves for reasons beyond our control. If something happens about the Spanish debt auction, that has an impact on our exchange rate, so we have to be on constant vigil.
But Governor, one of the classic medicine to tackle current account deficit is devaluing currency, which we had done in 1991. But here we find that you were always, very aggressive in the intervention. In fact, one of the outcome of that is this liquidity is being sucked out. So why don't you allow the rupee to find its own level?
Well, two answers to that. First, about devaluing the currency in 1991 we had done because the rupee was overvalued by about 20% then. Now, as I just said, rupee is at its level. And I believe we are letting the currency find its market determined level. Even if many of you very keen observers have different understanding of the situation, I believe we've intervened completely consistent with our policy, and both the nominal rate as well as the real effective exchange rate reflect the economic fundamentals.
So one of the questions that I posed to Dr. Rangarajan yesterday after your policy was that you've done your bit now as RBI, and is the ball now in the government's court? And of course he said the ball keeps shifting between both. But do you feel, sir, that for the last year and a half, there was this relentless crying out, if I may use the word, from the market, from corporate India, please cut rates, we are hurting, we are hurting, we are hurting. You've done that now. And while you have also put the sting in the tail to say that there's very little scope any further, but do you believe that now you have responded and there are a lot of other issues which are perhaps resting with the government when it comes to the fiscal deficit, when it comes to the other issues you just talked of, and that you would like to see that happening very quickly before we can move to the next trajectory of growth?
Yes, certainly. If growth had moderated last year, if investment had actually become negative in the second and third quarters of last year, there were a number of reasons. Monetary tightening was only one of the factors responsible for this. There was the external uncertainty, and there was the domestic uncertainty as regards policy, as regards governance, as regards a number of implementation issues. So as I had said in yesterday's press conference, and which I would reiterate here, our adjustment of the policy rate is a necessary condition, if at all, but a lot of other things need to be done in order for the economy to meet the sufficiency condition. And those things are quite clear. The government has to deliver on the fiscal deficit, and the most important and the most urgent thing that needs to be done in that regard is adjustment of administered prices of petroleum products, but a host of other things. Although we commented on the fiscal deficit, on the subsidies, I think a whole lot of things both at the central government level and the state government levels have to be done.
And if that happens, sir, would you relook at the statement that you made as part of your guidance that for now there is very little scope? Why I'm asking you this is because the market had come to expect the fact that over the next 12 to 18 months we'll see 100 or 150 basis point kind of a cut over a period of time, of course. And the expectations totally lowered over a period of time to now most analysts or experts talking of course, you've heard the adjectives, coming out shocked, stunned with 50, so we'll leave that part out. But going forward, sir, what is your larger outlook? Is this camp which says we probably will see a little bit more happening till the end of the year? Or would you say that if things get better, you would continue your easing?
Of course we will continue to ease if things get better. Okay, our guidance is based on a certain understanding of how growth and inflation might unfold. And as we've said, at 7.3% growth rate for current year, we're growing close to the post-crisis trend rate. And if we try to accelerate that without other things falling in place, we will fuel inflationary pressures. Okay? But if supply response comes in very effectively, much quicker and much more forcefully than we expect, certainly there's scope for further more action than is factored in at the moment. Yeah.
There is scope for more action than is being
more action provided
Provided
growth is more optimistic, inflation is more subdued than we currently expect.
Governor, I can well imagine the kind of pressure you have undergone. I mean, Pranab Mukherjee, Finance Minister, almost announced the budget, announced the policy half an hour before you and all. Tell me, given a choice, if you were left to your own self, would you have gone for 50 basis point or maybe 25?
I believe so. I was left to myself. Ultimately, a lot of analytics go into the policy determination.
Well, I am told that even your advisory council, most members were not even favor of 25 basis point hike. You overruled them.
Well, advisory council last meeting deliberations are yet to be in the public domain, but you're right that over the last 2 years, we've gone counter to the majority advice of the advisory council. That's a separate debate.
Yeah.
But the action we took yesterday, I believe, was consistent with our reading of the growth and inflation dynamics, and it reflects our best professional judgment. Ultimately, you know this, but I need to reiterate it, that a lot of analytics come in and go into the policy determination. But finally, it's a judgment call.
Yeah.
And that judgment call was in favor of a stronger signal.
One supplementary to this again. Inflation expectations are quite high still. Even then, you have gone ahead for a cut, 50 basis point cut for whatever reason and all. Now, from now on, is all the options open or only easing?
All options are open.
Including rate hike?
Oh yes, certainly. I would say that both the probability of a rate hike and the probability of a further rate cut are non-zero, but small. I had indicated the other part, just now in answer to Mr. Law's question. And about the probability of a hike, that would depend on inflation, generalized inflation and demand pressures resurging. But our action yesterday was on the understanding that demand pressures are under control, aggregate demand had subsided. On the other hand, there are risks to inflation. All of them we'd mentioned. There is the fiscal deficit, there is the international oil prices, there's the monsoon outlook, there's food prices, there is the currency, and all of them could pose an unpleasant surprise, or they could pose a pleasant surprise too.
So one more,
Yeah.
you would not like me asking these questions, but tell me, sitting in a chair, Reserve Bank of India Governor, country's chief money man, you hiked rate 13 times between March 2010 and October 2011. Despite that, inflation is still entrenched and inflation expectations are high. So have you failed? Whose failure is this? Who do you blame for this?
Well, whether I have failed or succeeded is something for judgment that you have to make, and a judgment that history has to make. But about the 13 rate hikes, all of you had followed the trajectory of our policy over time. We had to do that because of the pressures on inflation, both from supply side, which were translating into demand pressures, into inflation expectations, as also demand pressures. This is, as I said several times before, our inflation in part is a problem of success. Rural incomes are going up, and when an economy with a per capita income of $1,600 to $1,700 incomes go up, that quickly translates to consumption, and that's what we've seen happening. And indeed, we need to encourage that, but before that happens, we need to increase the supply response in the economy.
So when one speaks to corporates, the sense one gets is of a very grim kind of a situation. Growth is slowing down, we don't have much growth happening, capex cycles have ground to a halt, liquidity remains a problem, we are hurting. That's by and large the sense one gets from a corporate when one speaks to them. But when I read through your assessment, which is presented to you, and when I hear you, I don't get the same sense of the situation being grim when it comes to corporate growth. What's your reasoning on that? Do you think that we are not in as dire a situation? Because that's the feeling which corporate India has, that we are hurting, but governor doesn't seem to realize that or understand that. Of course, you base your decision on certain data points that you have. Could you articulate that to us?
Well, the interest cost is a relatively small part of their operations. So maybe they talk about interest cost not so much from their costs of production, but about consumer loans, retail loans, which is available to larger public for them to buy their goods and production. Okay, but I don't know where they're coming from. But I believe that low inflation is good for the economy, good for the country, and I believe good for the corporates. Okay, because only when there is low inflation will they have enough certainty in order to make informed investment decisions. So I'm sure they realize. You don't
believe capital is a constraint? I know you stepped in very strongly and eased off liquidity a month ago. You don't believe, sir, that capex itself, capital itself, is not a problem for corporate India today?
It may have been. Okay, there were some constraints, but I believe that credit demand also was muted. And in any case, now liquidity has become slightly more comfortable. And should there be demand from corporates for credit, I believe that the conditions now provide for this. All I'm trying to say is that interest cost is a relatively small part of large corporates' operations. I'm also making the point that a low inflation is good for them in the long run, for their investment to yield the returns.
And that's what you're trying to do?
Absolutely.
Governor, apart from the balancing between growth and inflation, bringing down inflation, other big challenge before you has been managing liquidity. In fact, it had been quite a tough year for you, fiscal 2012, right? Your document has estimated money supply at 15%, which was 13% last year. Could you tell us where will the money come from?
Well, last year, money supply growth was below our projection, was 15.5% revised, and it come around 13%. Okay, but this year, as inflation eases, people would shift from currency into deposits.
Meaning the money in people's hand, they will come back to the banks.
Will come back to banks, and that will multiply more. Okay, so that will improve money supply. And as far as base money is concerned, we have given guidance that we will manage it proactively and appropriately, subject, of course, to the limitations of government's cash balances being lumpy. So subject to that, we will try and manage it more actively so that liquidity remains within the target range.
Does that mean we will have the OMO or the bond buying program round the year?
I cannot really, I cannot really roll out or announce a program on a TV channel.
Okay.
But OMO is one of the options available to us. And when to do OMO, how much.
And CRR cut also another option, right?
Certainly.
Just to point out one technical issue, For the past couple of years, you have been insisting that your comfort level of liquidity, or rather the deficit of liquidity in the system, is around 1% of NDTL, roughly bank's deposit base. That's about, say, today's thing, about 60,000 odd crore. Last year, continuously you have broken. We had, in fact, last 3 months between January and March, it was 1.4 trillion. On one particular day in March, you have even close to 2 trillion. And now it is, of course, much better, but still about 80, 90,000. So which means it's always much higher than your projection. So does that mean that your target of keeping liquidity deficit and 1%, now you are abolishing the target? Is it become irrelevant? Are you looking at something else to see how much liquidity deficit should be?
No, I think it's advisable and necessary for us to maintain that commitment.
Yeah.
Okay. Of course, the experience of last year that you had related is quite true. But last year, you must recognize, was an outlier. Liquidity got sucked out because of a forex intervention. We had done open market operations to 1.3 trillion rupees. We'd reduced CRR, which pumped in 800 billion rupees. In spite of that, liquidity was in shortage.
Because almost equivalent amount, 1.3 trillion, you sucked out through the foreign exchange operations.
Yes, you can do the arithmetic. But as far as that commitment is concerned, last year we had not maintained we could not fulfill the commitment because of the lumpy government cash balances. This year, as liquidity eases, I think we will try our best to maintain that commitment, and I think maintaining that commitment is important for market players to make informed decisions.
Currency volatility is a given.
News continues to be bad, whether it is Europe or other markets.
We've seen healthy increase in our profits.
We are very happy that Africa is offering a stable performance.
While of course we have to look at costs.
We are keeping a close watch on the commodity.
Catch the biggest corporate talking about their earnings throughout this month. Only on Bloomberg UTV.
It was 1 year ago. We made a promise to stand by you.
I would like to compliment you. This is a very remarkable achievement. Within 1 year, you have been able to resolve 10,000 disputes.
I must congratulate you are doing a splendid job in creating awareness about the consumer rights.
I compliment Fight Back on its advocacy of the consumer problems and taking them to the concerned authorities. I myself watched the program and I found them to be very effective.
We are happy to have stood by more than 10,000 consumers and brought a smile to their face.
Losing my mind under sapphire sky. If I just had you.
You've never seen anything like it before. The all-new Sonata. If you're a first-time investor, frightened about that first move, planning for good old 40s, aiming to keep failures away, worried about those hard-earned savings, and puzzled about your choices, it's time to meet our experts. The Financial Planner, presented by BSE, Investors Protection Fund.
Presented by Sensex, India's index the world tracks. BSE Investors Protection Fund.
64,000 crores total debt sought to be restructured in fiscal 12. Is India Inc. on the verge of a debt crisis.
NPLs will be between 25 and 50% depending upon how the economy plays out over the period of time.
Indicator of 15 to 20% of CDRs would become NPA. I do not subscribe to that view. According to me, all restructured standard loans are really NPAs.
CDR has increased very substantially, there is no doubt about that, and it does represent stress in the system.
Lower the market goes, it becomes a safer place to invest.
The Nifty is pretty close to the 5,000 mark.
That's what the flavor of the market is today.
Banking and capital goods are the most attractive sectors to play.
It is completely an out-and-out traders market.
Countdown, presented by BSE, Investors Protection Fund.
Presented by Sensex, India's index the world tracks, BSE Investors Protection Fund and Tourism Australia.
एक बात समझ लो, डॉन को पकड़ना मुश्किल ही नहीं, नामुमकिन है.
Silence, please.
Business aspect, I understand it. It helps me to make the movies.
A film becomes a brand because people take to it in a certain way.
For a creative producer, it takes a lot of heart. In my creative decisions, I am not thinking about box office.
The foremost reason for Titan's early success is the path we chose. I think we were there at the right place at the right time. We made things happen. We didn't choose to topple HMTers. I think they fell by themselves. It's every day make or buy at Titan.
Hello and welcome, I'm Samina Rani and this is News Express. In an exclusive conversation with Bloomberg UTV, RBI Governor D. Subbarao says the rate cut alone won't spur growth and that the government too needs to do its bit. Adds that more rate cuts will happen only if strong supply-side action is seen. 2 days after the RBI cuts repo rate by 50 basis points, IDBI Bank becomes the first entity to pass on the benefit when reduced its base rate and the benchmark price lending rates by 25 basis points. This morning, remember, it was PNB as well which went ahead and lowered its base rate. The weakness in the rupee continues on Mint Street. The currency is inching closer to that 52 mark against the dollar. This level is the lowest level traded on the currency in the last 3 months. The cement space is in focus today as majors ACC and Ambuja Cements are expected to declare earnings today. Net sales for ACC are seen up 19%, while net sales for Ambuja are seen up about 24% at 2,727 crores. Those, of course, were the top headlines at this hour. Let's now go across to Vivek Lowe, who's in conversation with Market Guru.
Hello and welcome to this edition of Market Guru. Joining me today is Vetri Subramaniam of Religare Mutual Fund. Thanks very much, Vetri. Always a pleasure talking to you. What are you making of what's really going on? First up, let's talk about the most recent development. RBI's policy shocked the market with the 50 basis point cut, but not seen that kind of a euphoric reaction, really.
Yeah, I think it was clearly a positive surprise because, the market was expecting 25 bips. So 50 was clearly a big surprise. But having said that, I think the bigger picture is, where to from here. And if you look at what the RBI has been talking about since the credit policy over the last 2 days in various media, essentially they seem to be indicating that this might pretty well be the course of the entire extent of rate cuts, and that from here on it's far more data driven and they don't really have a very clear bias in terms of which way future actions may go. So I think that's left the market a little bit in limbo. Yes, everybody is happy and hopefully the rates will come down, but I think it's not going to be very easy for the simple reason that keep in mind that RBI has effectively been on pause since actually December of 2011, and despite that in the first quarter of this year you've actually seen market rates of interest move higher because of a very tight liquidity situation. So RBI has now cut the repo rate, but unless the market liquidity itself starts to ease, the actual actual room for market rates of interest to come down is actually a bit limited. And with RBI not really holding out the promise of this being the start of a full-blown rate reduction cycle, it leaves the market sort of, still unsure of which way it really needs to go.
It's interesting that, in fact, you make that comment, because that was going to be my next question to you, Vetri. In fact, when I spoke to him, he mentioned clearly, the RBI governor, that the ball really now is in the government's court. And I remember you having said recently that the government's decision to persist with the status quo, however, means that the gap between India's performance and its potential will